paraphrase Benjamin Franklin, experience is a very hard lesson, but fools will learn no other way. My name's Eric. Welcome into Above My Pay Grade. The virtue signaling that we see in economics and politicians, that will not lead to economic prosperity. You can't virtue signal your way through green energy and economic prosperity. You can think it all you want, but it doesn't make economic growth happen. I had a subscriber ask me about treasury and bond yields a couple weeks back, and I wanted to explain what's going on in Japan specifically, and I'll link the article in the description below. But Japan is using something called yield curve control. Now, I don't invest in bonds. A lot of people don't invest in bonds, but that they know of. I'll say this. A lot of pensions, if you have a pension, a lot of retirement funds invest in bonds. And it's hard to teach an old dog new tricks. And I'll tell you, in the bond environment, the 10-year bond in 1981 in the United States used to yield roughly 15%. It's a pretty good yield, right? And most people look at bonds as risk-free, a risk-free rate. And so if bonds are yielding 15%, I'd want to put most of my money in there, or a lot of it at least. And that's what people did with these retirement funds, 60-40 split. They put 40% in bonds. And typically, as equities or stocks are going down in value, people run to bonds because they're safer. And so their portfolio would balance out. We don't live in that world anymore. So when a government needs to spend money over and above their tax receipts, which every government in the world does this, which is just highlights how bad the economic distortions are, but every government in the world spends what they take in taxes plus some. And for those of you who are huge Keynesian economic fans, part of Keynesian economics is to government spending stimulates the economy, but they forget the part where John Maynard Keynes said that spending comes from government surpluses, not from debt, right? So during good times, during economic growth, the government would save money, and during economic hard times, the government would spend it. But our government has no brake pedal, and anytime we have a surplus of tax receipts, that just brings up more government spending for them. A new program, we can spend it on investigating how the bird and the waterfowl mate, or whatever they want to spend it on. So what yield curve control is, if you think about a bond as just government debt, a contract with the government, you go, the government sells a treasury, if you will, and let's say that treasury is $10,000. There's a certain yield on that treasury. That yield fluctuates based off demand, just like everything else. So if demand for the 10-year bond goes down, what do you think the yield would do? Go up to incentivize more buyers, aka the yield on the bond. So somewhat of a free market, and what the central banks around the world are trying to do is make it not a free market, because if demand for bonds goes down, there's a reason for it. Here's an example. We have inflation at roughly 9%. Government advertised 9%. Everyone knows it's higher. Why would anyone in their right mind buy a bond, like a 10-year bond, which is yielding roughly 3%, if you're guaranteed to lose that delta between inflation and that 3%? Exactly. No one would do it. And so demand goes down, which means the rates on the bonds go up to incentivize more buyers. Here's the problem for governments. If the rates on bonds go up, meaning the debt that they need to take on to service their stupid programs, if the rate on bonds go up, it makes it really hard for the government to pay their debts, and therefore they have to take on more debt to pay their old debt. It's just a vicious cycle. So no, we don't want that. Why don't we have the central bank buy government debt? So what's happening in Japan? the Bank of Japan has been using yield curve control for a long time. So remember I said as demand goes down, yields go up, and that's no good for the government. So how can we make demand stay very high, aka yields going down, right? So the rate at which the government pays on its debt, we need to keep that really low. But our inflation's really high, so no one really wants to buy the bonds. Who can we have buy the bonds? The central bank. And that's what the central bank does. Central bank goes in to the treasury market and just buys and sells bonds based off the yield they want to peg the bond at. So for instance, let's say the 10-year bond in the United States was at 3%, which it is roughly 3% today. If the Federal Reserve wanted to lower that, they would buy a bunch of government treasuries or bonds from the government. That's all they'd have to do. If they'd want to raise it, then they sell those bonds into the open market. Why does this distort literally everything? Well, if you think about it in simple terms, government doesn't produce jack squat. It's the citizens that produce goods and services. They're the GDP of the country, the gross domestic product. So they are the ones that fund the government. So the tax receipts from the citizens go to the government and therefore are able to fund government programs and all that kind of stuff. But since these governments are overspending, they also need to take on debt. So what happens if that debt doesn't come from the real economy? So typically what a bond is, if you're selling it on the open market and let's say Joe Schmo me wants to buy a 10-year bond, that money is coming out of my pocket and going to the government to spend however they see fit. Usually it's not in the real economy, but it's coming out of my pocket where I would spend it, and it's going to the government. And in 10 years, they're going to pay me back the $10,000 if it was a $10,000 bond, and they're going to give me a yield on that every year. But what happens if another entity like the central bank, who can print money at will, buys those? So it's not coming out of the real economy. It's coming from a computer that they go, and they invent the money out of thin air, and they buy those bonds. And then the government is able to spend money from the Federal Reserve or the Central Bank of Japan buying those bonds, and the Fed just created that money out of thin air. So now it goes to the government, and they pay a very low rate on it, and the government spends it. So it's injecting more money for government spending that didn't exist. Because when private citizens do it, they take money from the real economy, or pension funds or whatever. They take money from the real economy and they give it to the government to spend with a yield promised. But when the Fed does it, they print it out of thin air, goes to the government. Is this inflationary? Yes, it is. In the Bank of Japan, if you look at inflation in Japan, just hit a 7-year high. Bank of Japan now owns 50% of government bonds, government debt, 50%. Now, you don't need to know all the ins and outs and hear all the pundits say, what is yield curve control going to do? Will it cause inflation? Will it not? If you just simply understand this, the economy is production and consumption of goods and services. When dollars, yen, the ruble, anything is created out of thin air by a central bank and buys an asset like a bond, that is inflationary. Because they're creating the money. It didn't exist before, and they're giving it to the government to spend. So that is inflationary. And it causes the citizens to very much doubt the credibility of the currency and the solvency of the currency, because it's just this Ponzi scheme of creating more money to pay off the old money. So if most people that I know, especially in my generation, don't even buy bonds or understand them in the slightest. But if you're in a pension fund at all, or you have some kind of 401k that's invested for you, oftentimes these people are in bonds, and these bond yields are hot garbage compared to inflation. And they're going to stay hot garbage because as demand goes down, the Fed and other central banks are buying this stuff. Ridiculous, in my opinion. So let me know what you guys think in the comments. I think we're going to see more yield curve control, and the canary in the coal mine is going to be the European Central Bank, Japan. Watch what happens with them, because I don't think we're as desperate in the United States, because we're lucky, because we have the, and luck is part of it, but we have the world reserve currency. So they need dollars everywhere around the world, and so they often print their currency to acquire those dollars, thus devaluing their currency. But the canary in the coal mine is going to be Japan and Europe. What is happening to their currency? As you watch their currency fall, if you ever heard of the DXY, which is the dollar compared to a basket of other currencies, dollar's rising, all these other currencies are falling. Why are they falling? Because the central banks are forced to go into the market and buy up government debt, because the government can't really service their debt at a higher interest rate. Interesting. Let me know what you guys think in the comments. Hopefully I explain this, because it's hard for me to understand. I listen to this stuff and bank terms are used and all these acronyms, and it makes it difficult to understand, but hopefully I made it somewhat easy to understand. Let me know what you guys think in the comments. See you guys in the next one. Peace.